I'm often asked, is it cheaper for me to rent or buy? Well, the answer really does depend. It depends on the market you're in, the price point for the market that you want to buy in, what your income is, if you're paying rent now, how much you're paying, etc. If you have the ability to come up with your down payment and your closing costs, or remember, in this type of real estate market, many sellers across the country are now starting to contribute towards closing costs, which is why it's such a great time to consider home ownership. Remember, rents are rising in our country. CoreLogic just came out and said annual rents have increased by 8.6% per year. So if you're paying, $1,000 a month right now, guess what? Now your rent is going to go to $1,080, right? If you are paying $2,000 a month on average at 8%, now your rent's going to $2,160. So you can see those rental charges are increasing. So when we get into, is it cheaper to rent or buy? It really also depends on what are you comparing to? Like, are you just looking, if I pay $2,000 in rent, what's my house payment? That's one way to look at it. But I would really challenge you, if you're a first-time home buyer, really lean into the home finance analysis that I put together, because you're going to see if you continue to rent over the next 5 years, the number is astronomical on how much money you have paid out of your pocket with no chance of return on that money. However, if you're in a position to purchase a home and you do purchase, especially with seller concessions, which is reducing that cash to close, now also look in the analysis, you're going to see what's happening to your net wealth just by home ownership. So as part of the home loan process and the home loan itself, part of your monthly payment is going to your principal. That's your money. So we call it an equity savings account. So every month now you're forced that part of that payment's going into that savings account for you. It's your equity. Secondly, there potentially could be tax benefits with home ownership. Based on your scenario and a few other questions, an experienced lender will be able to tell you if there are tax benefits for you. The one thing that very few people talk about is home appreciation, and that's where wealth is built. So in this analysis, we're using a 4% annual appreciation rate, only 4%. And mind you, that over the last 2 years in this country, we have seen appreciation rates rise in the double digits, meaning it could be, again, based on where the property is in the area of the country, anywhere from maybe a 5% appreciation up to 35%. That means if you bought a house, let's say 2 years ago at $400,000, and let's just say that you're in an area where that appreciation rate was 10%. 10% of a $400,000 house is now $40,000 that you have in equity. And that's what we're going to call appreciation. Now think that through once that continues to happen. Now some years are going to be better than others. Maybe that year at 10% was a good year. And maybe this year it's only going to be 2%. Or maybe this year you don't appreciate it at all. Or maybe this year your appreciation goes down by 2%. Overall, appreciation is a positive integer, and it continues to increase over the life of your ownership in that property. So the longer you own it, the better chance you have of seeing that appreciation and the wealth built through appreciation. Now, renting may be a better option if you're not quite sure that you're going to be in that area for a long period of time. And by that, I mean, if you're still like, I think I'm going to move to Atlanta, but I'm not quite sure I'm going to like it, then rent. Renting is a great option, especially when you're moving to a new place. Get in, feel it, figure out where you feel that you're going to be best suited and that you get the vibe and all that stuff. So renting can be a great option, but the point is here, you may not want to rent forever. Once you found the area that you want to live, now that's when you consider home ownership. If you're in a position where you don't have any money for a down payment, consider that there are many areas across the country that provide down payment assistance programs. Now, these programs come and go, so they're not always available. But again, checking with your local experienced mortgage lender, they're going to be able to guide you on what programs are available and whether you meet the qualifications for them, and just the pros and cons of using a down payment assistance program. There are a couple of other options when we think about down payment, though, that many people forget about. And one is a gift from a parent or relative is an absolute eligible source of funds for a down payment. So let's think about that. We see more and more parents, relatives wanting to help these first-time home buyers into a home that are lacking the down payment. Maybe your income's there, your job stability is there, you can qualify for a home loan, and you just need a little help with the down payment. So know that a parent or relative can gift you your funds for the down payment. Now there's a process to it, so don't go out there and just be like, hey dad, I'm looking to buy a house, can you give me $10,000? We want to slow that roll. Make sure you're talking with your lender, because there's a process in which the parent will have to gift the funds and some documentation, etc. But just knowing that might help to expand your thought about, I do want to buy a house, I do get it, and I just need a little help with down payment. Maybe that's your scenario and maybe it's not, but it's just important to know that it is an eligible down payment option. The other option to consider is that if you've served in the military, the National Guard, or the Reserves, remember that the VA home loan program is fantastic. And with a VA home loan, there is no money down required. And lastly, if you have a 401k, also know that you can take out a loan on the 401k and use those funds for your down payment. Now there's pros and cons to that, and I'm not advocating either way. My point is there are situations where that may make sense, and you'll want to again talk to your financial planner together with your lender to determine if that is a situation that best serves you. Now you might be at the point where you've decided, all right, Kelly, I'm all in, I'm excited, I want to buy a house. It is important to know that there are some affordability strategies out there that can really help you when you're negotiating your purchase contract. So be sure you're working with a professional real estate agent, somebody with experience that understands that market, and they're going to help to kind of walk you through, are seller concessions a thing in your market? Here are a few strategies to help with affordability in this market. One of which is, as inventory is increasing, many sellers are more willing to contribute towards closing costs. And this is a big deal because let's say the seller is going to contribute $5,000 or $10,000 towards your closing costs. Now, what you do with that money is really going to depend on your particular goals and what's most important to you. Is it most important to you to reduce your funds to close? So therefore you would use that seller credit to pay all of your closing costs? Or is it more important to you to use that seller credit to actually buy down the interest rate and lower your monthly payment? The great thing is you can choose how best to use that money. Again, talking with your lender and vetting and going through some of those options, that's what can be done to show you, oh my gosh, wow, I see it. For me, in my particular situation, it might make sense to do a little bit of both, meaning that maybe a little bit of the rate buy down to help with the payment, and maybe the rest of that seller credit goes towards your closing costs, so it's also reducing your cash to close. Strategies and using an analysis like we're showing you here is so helpful to you to best understand, okay, here's my 4 financing options, here's how best to use that seller credit, and here's what helps me as a buyer. And that's what this comes down to. This isn't about me. This isn't about your friends. This is about you and what's important to you and what your financial goals are and where you need to be in order to buy this home. I hope you found value in today's video. I have a passion for education and sharing this information. Be sure to share this video with anyone you know that might find this topic helpful. First-time home buyers in particular, this is great information. As always, please remember to subscribe to this channel. Thank you so much for watching. Until next time.